There's also been a bit of a drop that we've seen in crude, almost to the tune of about 3%. Treasury yields have fallen, and there's a mild rise coming in gold prices as well. So that's pretty much the picture.
You know, Aisha, what has, for me, what the surprise factor from the Fed is that there was no hawkish undertone, even though there was no mention of a rate hike and there was no mention of a rate cut. Which means what Fed has done is that they've simply bought time. And they bought time at a time when you can argue about inflation both ways, because the last couple of readings have not been very encouraging. But they've also, in a sense, put cold water on all the assumptions that we are in for a bumper rate cut cycle towards the second half of this year, just on the heels of US election, where the US Fed has also said that politics is unlikely to have impact on the rate decision. So that dismisses all the rate cut chatter also. The setup of the market at the beginning of the year was rates had peaked out and rates will only go down. Then the chatter shifted after the US inflation data, which is that rates may actually not go lower at all. Rates may actually go higher if Fed feels uncomfortable about inflation. So yesterday's comment from US Fed have, in a sense, they've not done anything to harm the market or anything to really excite the market. All they've done is that they've simply bought time, claiming that inflation in the near term is not scary, but it is hard to predict.
Lots for our markets as well to digest, especially that very dramatic Tuesday's trading session that transpired, wherein soon after hitting that record high, we drifted in the red and gave up all of our gains. So closed in just a smidge in the red, and that was pretty much the case across the board. So, I mean, the big question is what happens today? Because for the last two consecutive sessions, FIIs have turned buyers. Minuscule as it may be, at least the selling, Nikunj, has definitely stalled.
Yeah, so you want to look at the bank Nifty, because for me that is the more important moving part, and that in a sense was the exciting factor for the market also on Monday. On Tuesday, we did not see the kind of follow-up buying which you wanted to see on the bank Nifty, because it in a sense collapsed from the day's high. Now, to put things in context here, the setup is not bad. Global cues are stable to calm. Crude is moving in the right side where you want it to move. Dollar index, nothing very negative there. And the biggest gray area for the market the entire month of April has been that why are FIs selling? If that selling, which in last 2 days has turned flat, and there is bout of short covering which is there in the F&O market, then you would say the bias of the market really has to be positive. So in this market, rather than getting worried about what we saw, let's say on the Tuesday second half of the trade, I think that may not really be the right benchmark of judging where rest of the month and how things actually would move. I continue to maintain, or we continue to maintain, that I think May historically has been a positive month. Seasonality is positive. In the run-up to the election, there is not going to be anything at the policy front which is going to be negative. Markets, they tend to rally in the run-up to the election, so that that factor is also at play. So May seasonality, decent macro, nothing at global level. Now that we've heard from Fed also, all that put together, there is case for markets to trade with a positive bias rather than the negative bias. The only gray area was FI selling, and if that also in a sense gets arrested, I mean, you don't want to see big buy numbers, but if you don't get big sell numbers, that will give confidence to the market that, okay, is it time to go back into large cap stocks? Is it time to go back into FI dominated stock? Is it time to go back to banks? So my sense is that May will be a decent month. May will be more positive than negative. Looking at the setting on the table, unless something negative transpires, I don't think the market right now are showing you signs of fatigue or worry.
Okay, and then add to that as well, another positive factor at least is when it comes to the macros, the kind of GST collections in gross terms for the month of April, and that hit a record high of 2.1 lakh crores, which has seen a growth of about 12.4% on year, and that was largely driven by the increase in domestic transactions as well as imports. So Nikunj, even when we look at that data, that's fairly positive. We have seen the overall monthly GST collections continuing to rise.
See, you have to compare the last quarter or the last month data with April, and there is a huge uptick which clearly is there. What has changed between March and April? Well, it's a financial year which changes, and the tax assumption, they all obviously will change, because you then in a sense make a, then in a sense, you know, the new financial year impact seems to be having a positive impact. But the fact that incrementally with each passing month on a high base also, if the tax collections are so robust, that is an underlying example of which way the economy is moving, which way the bent of the earning season is going to be. So for me, the numbers are positive, the numbers are constructive, and that again is a clear endorsement that there is just no slowdown whatsoever, irrespective of whatever everybody seems to be talking about it. Just think about it, the numbers which we've got from banks, what kind of indications we've got from NBFCs, GST numbers. So that just tells you that the curve in the economy is not plateauing. The curve in the economy is actually on the stronger side rather than showing signs of fatigue. So this again becomes this important part just to, I mean, GST numbers are not a market moving number, but these numbers in a sense are more like an indication of which way things are moving.
Okay. And then, of course, the news flow, which was quite the, big shaker, and it's going to really take the limelight away from Kotak Bank today. The change of guard, the fact that KVS Manian has stepped down and the speculation is rife in the market as to where he's going next, that's definitely a bit of a jolt to Kotak.
You know, nothing seems to be going right for Kotak. Yeah. I mean, frankly, if you
bad
think
days
about it,
bad days.
Yeah. So these are, it just could be a bad patch. But frankly, from a market standpoint, you would like to assess and say, okay, what has changed after the new CEO? Is there going to be an internal restructuring? Now, if there is going to be an internal restructuring, why was Mr. Manian promoted after the change of the guard? So the change of the guard happened. Mr. Manian was promoted. The speculation that he would be joining some other private bank, that was put to rest after he was promoted. So after promotion, in less than 2 months, what has changed which in a sense has prompted him to step down, and why has the board accepted his resignation, which has come with immediate effect, given that he's got fiduciary responsibilities and he does oversee the entire digital business. So this in a sense is a clear indication that there is going to be major restructuring, and that major restructuring is something which in the near term could add to anxiety, or could lead to some amount of investor concerns. I still feel that Kotak is a cadre-based organization. It is an organization where these transition process in a sense will take some time, but they are transition processes which actually will go through very, very smoothly. The bigger problem for Kotak in the near term is that why were they on the wrong side of RBI when it comes to the entire digital business? For me, that is a bigger concern rather than Mr. Manian's exit. Now, markets would like to speculate that, okay, if there is such a strong old guard which is moving out of Kotak, where will he join? It is not that he's hanging up his boots. We know that right now there are a lot of other smaller private banks where the CEO position in the sense is open. So markets will speculate. We don't have any confirmation, so we'll not get there.
No, but KVS Manian in his letter as well to the MD has written, which we've got access to, that he's tendering his resignation to pursue other opportunities in the financial services sector. And our sources also are telling our reporters that his resignation was accepted with immediate effect on April 30th itself. And he is citing opportunities within the financial sector as a reason. So this or that, it's going to be something within the financial
space. Yeah, but you
space.
don't know whether,
Of course. The name that's being talked about may not be it.
The name may not be there. Maybe it could be a completely different role, because when it comes to taking over as CEO of a private bank, that has to be approved by RBI.
Sure.
So before our viewers they start speculating, we must realize that there is a process when a CEO or a MD role is approved by Reserve Bank of India, and that is something which I don't think would have come when he's resigned. So I'm just putting facts on the table here. His exit has come as a shock. Why? Because he was promoted after the change of guard. But if markets are speculating that where he's going, I guess you could hold on to your horses, let the news come out rather than trying to guess the news.
No, for sure, but
if you like this video, then like, share and subscribe to ET Now.